Hey, good evening, everybody. Welcome out to tonight's weekly training webinar for all the members of Tax Sale Support. Thanks for joining us tonight and every Wednesday when we have these webinars.
Yeah, April 1st, April Fool's Day, I guess.
yeah, April Fool's Day. I haven't had any good tricks today.
No, I haven't, except for this coronavirus.
I haven't seen my kids yet though either. They're always the one that do the tricks.
You know, of course, the coronavirus big April Fool's joke. That's what I was hoping for.
Yeah, nope. Still here.
Anyway, we really appreciate you guys being out here with us today. We've got some important things to go over. We're going to be talking about due diligence and you know how we research tax deed properties.
Yeah. Before that, let's just talk news and updates here for a minute. Yeah, the virus thing is still affecting the live tax sales. We still don't know dates yet because we're still sort of up in the air in terms of when some places will get back to business. So we're in kind of a holding pattern in some ways.
Yeah, we have been talking with some counties though, and there is different counties that are looking at moving some of the sales to an online auction, even if just temporarily, to get some of these properties sold, and really also because these counties desperately need the money as well.
Yeah, they're not going to be able to go for too long there without without holding that sale and collecting some of that money.
Yeah, the good news is though that there still is online auctions taking place. There's still a lot of over-the-counter opportunities. So even with the live auction shut down, there still is some pretty good opportunities out there for investors. In fact, we're seeing less competition at some of these sales, which means better deals as well.
Yeah. So we're going to talk about due diligence tonight, and some of the steps that are involved here with due diligence. But going into it, just remember that the idea here is to be able to learn what you need to about the property without spending, with I guess in as limited amount of time as possible.
Yeah, definitely. So, what do we mean when we talk about property due diligence? Really, this is just the research that we perform as investors before buying a tax lien or tax deed. It's really just kind of a method of qualifying the property to make sure it's going to be a good investment.
Yeah, it's about I think it's about trying to ensure that you're making good investments, and the only way you can really determine that is by digging into the specific numbers that the property has, and that's kind of what we figure out in that due diligence process.
Yeah, and Shane made a good point about the research that we do on a property really should be relative to the cost of the investment. So what I mean by that is if we're buying a $300 tax lien, we're not going to put the same type of due diligence and research as if we're buying a $30,000 tax deed.
Yeah, exactly. Really, the two different investments probably really would only require, would require very different amounts of research in order to feel good about it.
Yeah. Well, and you could even say the thing with the $500 tax deed versus a $50,000 tax deed.
Yeah.
If we're spending more money, we're going to make sure that we perform more due diligence to protect that money.
Yeah. So the property research itself basically begins after we've got a list, of potentials. So it's really it's the process we go through in trying to determine what our potentials are going to be, and to eliminate investments that won't work.
Yeah, we always set a parameter about how much we're looking to spend, especially if it's a large list. If you only have $10,000 to invest, you're not going to spend time researching properties that are over $10,000. You're going to focus on properties that are set maybe between $5,000 or $10,000 or $1,000 and $10,000. But you're not going to look at properties that go above that amount.
Yeah, it's also important to remember it works as a process of elimination. So basically what we're doing is we're trying to disqualify properties that are going to fall outside of specific parameters, or that go outside certain parameters that we set, in order to find better properties. So the idea is just to eliminate everything that's not going to work so that we can focus our attention on those that do.
Yeah, in fact, if you guys have watched some of our webinars on the quick glance method, that's kind of the process that you're going to be doing as far as the list side of it. You know, you're eliminating that list. And the reason we want to eliminate down the amount of properties we research is really has to do with time. You know, you could spend a huge amount of time just researching one property and really kind of get wrapped up in it. And so that's what we're trying to do is save our time.
Yeah, well, if we don't, it's easy to waste it.
Yeah,
you know,
absolutely.
it's so easy to waste time with tax sales and with research that you perform. And so let's talk here about what we consider to be, you know, the research that we perform here. Basic research is really what we would consider these steps to be. A basic level of research that we basically perform every time we start to even look at a property, really.
Yeah, absolutely. There's really kind of 6 steps that we go through. Now, when we say L&R, that stands for locate and research. So, you know, we're going to go through each one of these steps, but starting with verify if the property is available, and then ending with, you know, holding cost and checking for risk.
Yeah. So first, verifying the availability of the property, it's a very basic thing to do, but oftentimes, you know, the list that you're working off of is separate from, you know, separate from other county records. You know, it could be an older list. You know, really, the first thing we want to do before we waste a lot of time, you know, looking into it is just to make sure it's still there.
Yeah, absolutely. So one thing we're going to do is we're going to go and look on the county website and see if there's an updated list. Even if we got the list the day before, we're still going to go back and check to see if there's going to be a new list available, because we don't want to waste time researching properties that have been taken off the list. And you can especially see this happening as you're looking at an auction list and the auction is approaching and coming closer.
Yeah, totally. This is especially important. It's an important step to do on online auction properties because yeah, these properties are facing foreclosure and they do have a tendency, many of them do, you know, to redeem right before the sale. So we want to check the availability of the property first, just to save ourselves any time so that we're not looking at stuff that's no longer available. You know, it's also important on over-the-counter stuff because it gets bought up sometimes, and so and counties are also getting better about keeping those kinds of records updated too.
Yeah, absolutely. So we're going to go back to the county website. That's always where we're going to look at the newest version of the list, unless it's some type of online auction. And then those are usually updated daily on any properties that have been redeemed. They'll just go ahead and mark them as redeemed or take them off the list.
Yeah. So, you know, normally the way we verify is by basically going to the source and checking it there. So if it's an online list or if it's...
Yeah, and the reason we talk about it is because we've spent a lot of time researching properties that we couldn't buy because they were taken off the list because we didn't go check to look to see if there was the updated list. And that applies to both online auctions, regular auctions, but also over the counter. If you have an active over the counter, you don't want to go through all of these next, you know, 5 steps and have it be on a property that isn't no longer available.
Yeah, certainly. So once we can identify that the property is still there, oftentimes, you know, it'll be on the county's online list, maybe, or you know, it might be in some other way. But oftentimes, we have direct links that will take us right to this step 2, which is to you know, to locate and research the county, you know, the county records on the assessment records. So you know, sometimes they'll be located right there, but if they're not, then you know, we can oftentimes easily pull that up just either using let's say a parcel number on the property, or we could locate it by owner name as well. But we're basically looking for the basic property record that the county assessor used to value the property.
Yeah, absolutely. You know, we're going to go to the county website. We can usually find that right underneath the assessor's record. We could use Google and pull up assessor records or property records. It'll usually help pull that up. But, you know, if we're looking at like some type of an Excel list or some type of PDF list, we're going to actually have to copy and paste those numbers into the parcel search tool, where an online auction, you can just click on that link and take you there.
Yeah.
But over the counter list, you know, most of the time aren't going to have that. You're actually going to have to research the property.
Yeah. Now, if we are pulling up the records, on the property, there are certain areas that we generally are going to pay attention to, or if we've got to locate records, certain places that we can go. So treasurer or tax collector, it all depends on where we're dealing with, but always related to tax information, assessor, county records, and also, the county recorder, sorry. County recorder is the other office that we can use there to get some of the official legal records. But the assessor is where we go for most of these records, related to all of this stuff here. And it's kind of the stuff that we can use to determine the basic numbers of whether a deal is going to work or not.
Yeah, so we're going to use the assessor records to look up the assessed value, the property address, any type of zoning information, sales history. This is really where we're going to get a lot of the tax record information, the assessor record information, to determine if this is going to be a property that we want to research further.
Yeah, this is also where we take note of stuff like how much the annual taxes are, because we want to account for holding costs, and rather than needing to go back and do this at the end, it's easier just to to grab that information while we're there.
Yeah, absolutely. So in addition to that, looking up the ownership information, because we're going to use that ownership information later on to research the property in the court records.
Yeah, and we would use that using just one of the parcel search tools, like you see, or like any of the search tools you see here. So in this case, we've got a portal here that is for lots of different areas. It basically goes to either the assessment records, which is their property search. You've got the tax records, which are under taxes and assessment. And then you've got the mapping for both of them under GIS mapping.
Yeah, so this is an example of a regular assessor search where you could type in just the name of the property owner, the address, or the parcel number. Usually we'll try the parcel number. The parcel number is really kind of like a social security number on the property. So, every detail about the property is going to be connected to that number.
Yeah, in the assessor record, we've got an example here that we're looking at. Basically gives us a rundown on everything that the property is. So one of the things that that tax sale investing is really all about is spending time going through county records, learning how to read and navigate records. Because it's really where we get all of our information is through county records like this.
Yeah, well, and within this county record, we can see a ton of information. If we look at the very bottom left-hand corner, we can see the sales information. We can see what type of deed was issued. Was it a quitclaim deed? Was it a warranty deed? We can also actually click on the book and page number, and that's going to pull us. That's going to pull us up the deed to the property, so that we can research that as well.
Yeah, and and from here we can also access any of the maps. We can see the values, who owns it. We can see information related to how it was built, property valuation, and taxes are all right here at our fingertip as well.
Yeah, so really within just a matter of a few seconds, we can determine, is this a property based off the assessed value, the details, the sales information? Is this a property that we're going to continue researching more into? Because as we go throughout each one of these steps, we're going to go to step 1, step 2, and we're going to have properties that we eliminate after step 2, step 3, all the way down to step 6. We're going to have properties that we may do part of the research on it, but are going to eliminate as we go from one step to the next.
Yeah. Now, with tax deed properties, normally, the opening bid amount, or normally the opening bid includes everything that's owed in taxes. But sometimes we can learn things from the tax history on the property and what's gone on there, just with the tax records alone. Kind of depends on
Yeah, in fact, with this one, you can see on the right-hand side, you can see certificates on the property, and we can see the tax deed application on the property. So we can see how many, how much back taxes are due on the property right now. We can see what years are due, and if a tax deed application has been applied on the property, which this one it has, which means that this property is currently in a tax deed foreclosure.
Yeah. And here's just another example here of court records.
Yeah, this is what we're going to use to research any type of liens on the property, any type of governmental lien that could survive after a judicial foreclosure, a tax foreclosure.
Yeah. So we can see the property foreclosure there, in the examples, right there. We can see it was the last thing that happened.
Yeah, and the way that we're going to search this is with using the property owner's last name, or excuse me, their entire name. So within this, it was Barbara Reed H, and so middle name being H. So we went ahead and searched by that to pull up any of the additional records. Now, as we're doing this, we may go ahead and just use the first and last name as well to see if maybe she had something recorded without her middle initial that could be relevant to the information. But what we're really looking for is those other governmental liens.
Yeah. Basically, yes. The main thing that we're trying to identify there is just a government lien that could be against the property. Because if there was a government lien issued against the property, it would be included somewhere in the legal records. And then, the GIS maps, the maps are such a big part of what we do, and just getting familiar with it and learning how to operate the different layers on it is something else that also helps. Because, like, for instance, a map doesn't do you a lot of good if you can't get the satellite version of it in some cases, or at least it's a lot easier to use when you get a satellite version of it.
Yeah, absolutely. And a lot of these counties are making these maps available. Not every county has them. Some of the smaller counties will still have Plat Maps or online maps that you can look up that are colored, but they may not, have GSI or online type search features. But like Shade mentioned, as you start using these maps, a lot of them are going to have layers and base maps that you can search, different things within these GSI maps.
Yep. And really, when we look at the GIS map, we're looking for a couple of things specifically. We're looking at the accessibility of the property first, making sure that you can access it from a public road. We're also looking at its size and oftentimes comparing that to surrounding properties in size, because we want to make sure that it's big enough for its intended purpose if we're just dealing with raw land or with vacant land.
Yeah, we also want to make sure that it has access to a public road. We'll be able to see that with the GSI map. Also, even just looking and using these maps to check out the zoning in the neighborhood, we can see, is it completely residential, or is it on the border? Like this property kind of looks like it really could be on the border of residential property and commercial property. So we can use this to kind of determine exactly what the property looks like, but also any other kind of features around the property that may affect the property.
Yeah. Including, water features or something that we're always kind of looking for, because sometimes that the overhead image map wise is some of the best way to identify water features.
Well, and one of the advantages to these is it's not always going to be 100% accurate, but it gives us a pretty good idea of where those property lines are in conjunction with the property. And so we can see, how far does this property go into this, into this area. We can also get an idea from these maps about any type of natural features, or if it is land, we can get an idea, from at least the overhead maps of what the type of property looks like.
Yeah, no, we actually have a good question here, which is, how can you search for IRS liens? And what are the top states? So IRS liens are interesting, just because they wouldn't necessarily disqualify an investment. They just add a little more time to it. Because essentially you could still buy them. The IRS has to decide whether they're going to pursue their lien against the property and pay you off, or whether they're going to let go of their claims on the property, in which case you don't have to worry about it. So not necessarily a bad thing, but oftentimes, though, we actually eliminate liens like IRS liens a lot of times in the tax sale list, because it seems like that when we see IRS liens, they're normally listed there.
Yeah. The county governments like to put notice on IRS liens. And out of all the different types of governmental liens, I think that IRS liens, and I think Shade kind of explained that, are the ones that we're least concerned about, because with an IRS lien, it's kind of a waiting game, and the IRS can either, take ownership of the property and pay us off, or release the lien. But when it comes with something like a state lien or a city lien, that's where we want to, we're going to be a little bit more concerned. Well, we're going to be concerned either way, but with a city lien or a state lien, those have to be paid off. So with an IRS lien, we're either going to get paid off or they take ownership.
Yeah, we're not going to have to
cases.
pay anything.
Yeah, but with something like a state lien or a city lien, we're going to have to pay that off. But all of those are going to be researched through what we call investor title searches. We're going through and investing the court records, the assessor records, all of that information.
Yeah. Yeah, which by the way, there are different ways that we can use or access GIS maps. A lot of times, we can get little places here on the county record where we can pull it up. There's also more than one type of overhead image. They're not always part of the GIS maps. There's also, some counties have these things that they call oblique image viewers, and I think they're basically aerial shots from airplane.
Yeah, well, really, when we first got started, these were the very best ones, that they had. They didn't have like the layers or those type of abilities. They just kind of had a dot on the map, and sometimes it would just kind of give you a picture, where the area is located. But some counties, if they haven't got a full online GSI map, will have something like this, and at least it gives us the location, and we can see, roughly where the property lines are. And then we could compare it with this one doesn't have the lot lines on it, where we could compare it with a plat map and determine exactly where the lot lines are.
Yeah, in other words, like sometimes we might have to pull up the plat map to actually figure out where the lines were at, kind of how it was shaped, and then we would use something like that oblique image viewer, for overhead to kind of try to figure out where to place the lines there ourselves in a way.
Yeah, absolutely. And looking here to the map on the right, and we could probably flip over to the next one and see, but you can see the different base maps and layers that will give us the satellite image. So most of the time when you look up a property, it actually doesn't have the satellite image. Most of the time it's going to look like this one on the right. Mm-hmm. And then you have to go up to the base map or to the layers or to some type of tool within there to add the satellite image to the property.
Yeah, so here we can see some of our options there for base maps. And in this case, they use them as base maps. In some cases, actually, the satellite images are part of layers. We've seen it kind of both ways depending on the GIS system. In this case, we can use it to either pick whether we're going to have overhead imagery, or we can also choose other types of terrains or labels. And then we also have the option to go back and do different years of imagery.
Yeah, absolutely. So with this one, we can see from 2004 to 2017, could have even went newer. And where that can be interesting is, sometimes we'll buy properties, tax sale properties that used to have a home on the property that's been torn down. Well, as we go back and see, we can see actually, it was there in 2005, and it was gone by 2006, so it's been demolished for this long.
Yeah.
Or any other kind of details. Even going through the years, you can see each, with this case, they have one each year. You can see, was there people living there at the time? Was there any type of, improvements? You can see at least overhead that were made on the property. In addition to that, they also have, the imagery with labels. But then they also have things where, you'll have, a topographic map or some of these other type of maps that may show you trains and things like that.
Yeah, which sometimes we actually use the topographical map when we're trying to determine if an area is level or if
it's on a hill, especially if you can't quite tell and get a street view to the property to tell what it looks like from a street view, then, those are going to be pretty helpful.
Yeah. Now, another question there that's related to the IRS liens is, do counties disclose if there is an IRS lien? And the answer to that is yes.
Yes and no.
Yeah, I guess there could be some counties that don't do it, that aren't disclosing it. But
IRS liens is your less likely type of lien on a property. So like when California has their auction and they'll have 200 properties for sale, there may be a couple of properties that have an IRS lien, and they're usually more expensive type property. So the IRS isn't going out and usually putting liens on smaller type of properties, they're usually going to be bigger type of properties.
Yeah, well, and also, if we're buying liens, if we're buying tax liens somewhere, then we're not going to worry about IRS liens against the property, because there just wouldn't be important with the lien. Those IRS liens are most likely going to resolve themselves at some point here. The property's going to pay off property taxes at some point, most likely, and if they don't, then we could deal with the IRS lien after we foreclose. But if,
there's property we would buy completely knowing, that there's an IRS lien as part of the strategy, where we're going to have to wait a while before we sell the property, but we're not at major risk of anything other than that.
So for most of your lien investing, something like having an IRS lien against the property wouldn't be a problem. We would still buy that lien. That would still be a good investment. If it comes down to a deed that we're buying, then we also wouldn't hesitate to buy an IRS property, but we have to go into it with that plan, that knowing, we have to plan in, at least that 120 days.
Yeah.
So when you buy a property, we have to basically what I would notify the IRS, and they have, I believe it's 120 days to either, act on it and take the property, or they have to relinquish any claims to it.
Yeah.
So, one way or another, we're either going to get our money back, or we're going to be able to keep the property, and the IRS lien will go away, and we don't have to worry about it again.
Yeah, you're way more likely to come across a city lien or some type of state lien than you usually are with IRS liens.
Yeah, this is just kind of an example here of some of the layers that they have there, and you can see that in this layer we actually have different years and sales that are listed here as well. So you could kind of use them. Sometimes their comp system is tied into these same systems.
Yeah, well, you can also see things like floodplains. So if it's in a floodplain, we could check it there on the map and see, is it within one or isn't within one. And other types, there can be a lot of features on these maps that can really make it useful in more than just seeing, oh, there's the property lines.
Yeah. Now, in some cases, in some of your smaller counties, they may not have good GIS map systems yet, and in some cases, we still run into Plat Maps. Plat Maps are the PDF maps. We look at. They're basically usually black and white, look like this image right here. That have the basically kind of give us an idea of where the property lines are at. But don't give us kind of the ability to overlay it.
Yeah, in fact, when we first got started, 20 years ago, this was really the map systems that we used to find property. Now, just because a county doesn't have a GSI map doesn't mean that the property isn't worth buying. Or these plat maps can be just as useful in finding the property location, or at least close to as useful. Because what we'll do is we'll pull one of these up as we're pulling up Google Maps. And we'll be able to, especially if there's streets, you can usually find the property location down to a pretty good area, pretty close to where the property is located.
Yeah, we usually look for the nearest cross streets that will be specific to that area, and easy to find. In fact, sometimes the more unique the name, the better.
Well, and if the property has an address, then it's pretty easy to know where that property address is as well. But even without an address, you can kind of figure out which properties are where. If there's homes on the properties, which properties have homes and which ones don't, can give you a clue as well.
Another question here is, have you ever asked the county to return you the money due to something being wrong with or undisclosed when they sold the lien?
No, because they would never give you your money back.
Yeah.
They have in big, huge red, letters on every auction, buyer beware, do your own research. That's part of their process. In fact, they'll say that before every auction. So, you could try it, but you're not going to have very good luck, because it's kind of, that's what it's, That's the reason they tell you to do your own research and make sure you know what you're investing into. And that's also the reason they say consult a lawyer before buying, is so that they don't aren't on the hook.
Yeah, they've covered themselves.
We told you to consult an attorney. You didn't do that. That's your own fault.
Yeah. The county has covered themselves so well that what they would probably do is just make you look stupid.
Yeah. Don't. Yeah.
So don't do it. Oh, now, we did have a time there where we think the county may have screwed up. Where we bought the property and the lady said that
Yeah.
Okay, we've had weird things happen before where counties can make mistakes.
It's very, very rare though.
Yeah, it's very rare, to happen.
I mean, we're the only person that's ever happened to, and we could have took it to court anyway. But for us, it was an older couple, so it was just better to give them back.
Yeah,
they
it was
were
more
a
of like
couple, and so it was better for us to give them actually back the property and feel good about it than trying to take their property.
Yeah, and what we're talking about here is, we bought some properties at a tax sale, and about, I don't know, 6 months later, we were contacted by an attorney that worked for a lady, and they were asking about this property. They claimed that they had paid the property taxes, that they hadn't missed paying it, they had paid the property taxes on it, and that there had to have been some kind of mistake, and they were wondering, if there was anything we could do to work with them, because it was an older lady, I think, and it was the situation there was, it was kind of like a family property, and we bought the property correctly, but what was interesting to us was that when we went and pulled up the records online, we pulled up the tax records, and we could actually see the records of the payments that she had made on the property taxes.
Yeah, and we didn't verify, if those property were made on time. We could have positioned it differently and took them to court, but for us, it just wasn't worth it. We bought the property for a few $100s, and it was worth it to sell it back to them, at what we paid for it. And so, in that type of property was a very, very unique circumstance where they sell tax liens on properties, and then after they don't sell them, it goes to the state, and the state sells it as a deed. And so it was a very, very unique circumstance. In 20 years of business, it's the only time it's ever happened, so it's not something that we worry about at all.
Yeah. In that rare case there, when that came up, it would have been really bad karma to fight it. It would have caused all sorts of problems. And so, it made more sense, but not something you generally have to worry about. Counties don't normally screw up that bad.
Yeah. Fourth is Google Maps, and we'll actually use Google Maps to get street views, to check out neighborhoods. It really can be a pretty useful tool in researching properties.
Yeah. In fact, we also, what's nice too is the street side imaging is available a lot of the time now.
Yeah, absolutely. So we'll go check out not only the property location. And one thing that's nice as well is when you're looking at the street view, it'll give you when that photo was taken, when that street view was taken. So you can see, is this a current photo, or is this, within 6 months or a year? Is it 2 years, 5 years old? But it at least can give you an idea of what that property condition was at the time of the photo. But then also, we won't just look at the property, we'll also check out the surrounding neighborhood. See what the area looks like. Is this kind of the sore spot on the block, and it's in a nice area? So if you buy it, it's in a good area, you can essentially fix the property up, and it's already in a good area. Or is the neighborhood look like trash? That's going to totally determine what we're going to spend on the property.
Yeah, well, and whether, in some cases it might, determine whether or not we can go after the property. If we start looking at the neighborhood around and there are 4 abandoned homes, in the surrounding area there, that we're going to move on and probably, look for other properties, because we want to avoid, buying in, in a complete problem area like that if we can avoid it.
Yeah, we almost kind of look at like, like going for a virtual online drive, just kind of around the area, check it out and see, what the area looks like. And then from there, check into the market more and really determine what the property value is.
Yeah. Now, next we try to determine value. And one of the, I guess, things that's nice about what we're doing here is that we don't have to have exact numbers. There are some cases in real estate where you have to have exact numbers. And so everything you're doing is working towards exact numbers, but this is not one of those cases. Anything within 10% is generally going to be close enough for most of our purposes.
Yeah. The only case, would, where we'd look into is if we're really doing high competitive properties where, we're going to be buying, single family homes or something like that.
Yeah. So, we'll use websites like Zillow or Realtor to locate the value that they're estimating for the property. And then we'll also use those services to find additional comps, or comparable properties that we can kind of use to set the value for our property. And what we're oftentimes going to do is look for the cheapest, property that's similar, in that area, because it gives us additional cushion with our bidding.
Yeah, exactly. That's where, we can be pretty safe in what our property values are in what we think that the property is worth, because we've looked at the very cheapest properties that were for sale in the area. We're not judging the very best 3-bedroom homes. We're judging the very worst condition 3-bedroom homes, so that, because as you're doing a comparative market analysis that we're going to talk about, you can tweak that comparable to have the property be really, really high valued or really, really low valued, depending on the kind of comparables you pick. So we want to be very honest and pick, kind of the worst comparables versus the very nicest properties as our comparables, because you could easily end up overpaying for a property because you've had it valued at 100, where really it's valued at 80.
Yeah. Another question here is, what are the best states for, for interest investing, or for earning a high interest rate return with liens? And, it's been really competitive here most recently. So there's a couple different factors, that kind of come into play. If you're going to be participating in an auction, then we might look at a different area than we might if we're trying to buy stuff over the counter, which the biggest advantage of over the counter investing, really, where it's available, is being able to earn that maximum rate of return that's allowed in the state.
And really, it's kind of one of those questions where, good to email in and talk, email Ann, and she can kind of talk with you, because it's really going to depend on what you're looking to do.
Yeah, Florida's 18% is always great.
Yeah, you can just talk about the highest states, but what are you looking to do? Are you looking to invest over the counter? Are you looking to, attend online auctions? And so really, it's kind of almost kind of a question that's going to depend on what your personal strategies are, because I may prefer a tax lien in a state that only has a 12% redemption period, but that's because I could foreclose on those properties because they're over the counter already into the redemption period. So there's just so many different factors based on what you're looking for.
Yeah, like for instance, over the counter liens in Florida are wonderful, but they're only available for a short time once a year, for a period of about 1 month, and so they're not always going to be available. And, so you might look to other places. Yeah, the length of the redemption period and how that works too can have a pretty big impact on it. Yeah, definitely, I would say to call in to get more details about it, because yeah, it's going to be the best way to get specific with it.
Yeah. So we're going to use the comparative market formula, or do a comparative market analysis to determine the value of the properties that we're going to be reviewing. This is exactly what I learned as a real estate agent when I first got started to evaluate property. So before I go list a home for sale, I would do a comparative market analysis, so I could take it to them and say, here's the price that we need to list your home for. here's the properties that have sold, and this is the reason why your property is valued at this price. We're doing the same thing ourselves, essentially.
Yeah, we also, when we're going through this process to find comps, we learn a lot about what's happening there with the real estate market, what's moving. And really for us, we use price, like a weapon. We use it as the best tool, for selling things. And so a lot of things, that might normally, that might be important to investors are less important to us because the price is such a big factor in its selling.
So as far as performing comps, the first thing we're going to do is we're going to locate similar properties that have sold or are currently for sale within the home's area that are very, very similar to the home. And so these are what we call comps or comparable properties.
Yeah, we can use different tools like Zillow or some of the online valuation sites to locate the comps, or sometimes we can use the county's mapping features and their sales records in order to do it. But yeah, essentially we're looking for stuff that's closest to the property that we're looking at. So if we're dealing with raw or vacant land, then we want properties that are closest in size and are as close to it physically as we can find. To kind of give us an idea of what it sells for the neighborhood. But if it's homes or something like that, then we need to find homes that share the same attributes and are about the same age.
Yeah, absolutely. I mean, really, we do a more robust comparative market analysis on homes than we do with land.
Yeah, definitely.
Because really, that's where even price can be that much more of a factor, because you're going to be paying more for homes because they're just more competitive at the auction than land. In addition to that, you're also going to have cost involved in fixing the property up, rehabbing, whatever needs to be done to take it, including quiet title costs, to make the property sellable. And so because of that, it's a lot more important that we get these numbers right than if we're spending 20 cents on the dollar for a piece of land versus spending 30 or 40 cents on the dollar for some type of home, but still needing to put some money into it to fix it up as well.
Yeah, that's true. It becomes a bigger factor, and the comps we do are even more important, when we've got to sink additional money into it, because it's a bigger investment and it's going to take more time. But these are kind of it's a good visual example of what we're looking at with comps and how we might look at 3 different houses.
Yeah, what we're going to do is we're going to take determine the dollar per square foot by taking the home sold price and dividing it by the square foot. And so, let's say that we're looking at an 1,800 square foot home that has 3 bedrooms, 2 baths, that was built in 1965. Then what we're going to do is we're going to find 3 comparable properties. And we can see 3 properties here that range in square feet from 1,700 feet to 1,950 square feet. So, one's around 150, 200 square feet bigger, but not, pretty similar, because they all have 3 bedroom, 2 bath around the same year. But in sold price, we can see that they sold between, 105 to 110, which means that this property sold between $55 to $62 a square foot. So we know that our property in similar condition is going to sell for between $55 to $62 a square foot.
Yeah, how long they took to sell is also, a factor that you can look at. But again, the age of the property will affect the value quite a bit too. So it's important that those comps are similar in age, because if you look at, if your property was built in 1965 and you're looking at properties that were built in 1987, your comps are going to be off.
Yeah, and don't cheat yourself, because it'll be very easy for you to go in and find 3 similar properties, and instead of finding these 3 properties that sold for 107 to 110, you found 3 properties that were 3 bedroom that sold for 120 or 130 because they were in a little bit different neighborhood, or they had, they were newer or a little bit quality, or you were choosing those comps to try to elevate the price. The only person that's going to hurt is yourself.
Yeah. There's no point in polishing a turd either.
As far as finding comps, we talked about the property value websites, but an additional thing that many times can be a good resource. In fact, on our coaching call earlier when we were going through, we actually had a tab right there on one of the counties we were looking at that you could click on and pull up the comparable sales. The county records all of the sales information, and so that can be a good way. And a lot of these counties will actually have search tools that you can use to search the property sales within that given area.
Yeah, a real estate agent can always do comps as well. It used to be though that they were the only ones that had access to the MLS, and prior to the internet, that was the only way you could really get a property listed. And so their role is a little bit diminished here now that we have access to tools, online. So it's never really been easier to sell a property on your own than it is now.
Yeah. The real estate agents could do what's called a BPO, broker price opinion. And so, you could ask a realtor if they're willing to do that, and they may pay a flat fee to do the comparable market analysis for you. But, Zillow, Realtor are both resources. In fact, there's a lot of online tools and websites and stuff that will give you access to MLS listings and recent sales and software. And there's a lot of different things like that online that can also help you in doing your evaluations.
Yeah. I think a lot of this though is also still about trying to minimize how much time all of this stuff takes. While we're going through this process of pulling up all of these different records, like the assessment records, and we're pulling up the maps on the property, we also need to be looking for potential risks that might come up, and we're also looking for the holding cost on the property, because that can be a major factor in the property, is if it's got very high holding costs.
Yeah, absolutely. This is just kind of a final rundown to make sure everything within the property looks good. We've checked to make sure there's no evidence of governmental liens. We've also checked to see about things like POAs, property owner association fees, or HOAs. Even if it's within an HOA, even though the HOA lien can't stick to the property after the foreclosure, we're still going to call and talk to the HOA and get an idea of what the monthly fees are going to be, kind of how, we may ask about the property, explain that we're looking to buy the property, and just get a feeling from them before we buy it, and how easy this HOA is going to be to work with.
And what kind of fees they have, what they're expecting. You can save yourself a lot of time and headache, by doing just a little research on that stuff beforehand. But the biggest risk factors for us, if we're buying property like tax deeds, really the biggest risk there if we're buying land is buying useless land. Which there's a fine line there between useless land and land that has use and value. And useless land is really, we could define that as property that we can't sell because it doesn't have any true use.
Yeah, exactly. In addition to that, government issued liens for homes and structures. It's really condition of the property improvements. When it comes to structured property, we can only see what we can see from the street in most tax deed situations. You can't walk through the property, you can't view it. So we really need to determine that value of what the property value is, but then also really determine what we think those property improvements are going to be, because we're kind of guessing that based on what we can see.
Yeah, it's also why if there are improvements, we have to have some kind of an on-site evaluation, because we have to know what the current condition is to even be able to estimate if it's if it could be a potential investment or not, and if so, how much we should invest into it. We have to guess and estimate on things like those repairs. And so
that's why it's so important that we don't overpay for property, and we set our max bid amount and we stick to our max bid amount.
Yeah, because overpaying, is something that can happen as a result of auctions. But these things are relatively easy to avoid. Avoiding useless land is pretty simple. I mean, you give yourself certain rules, but just sticking by some of these things will help you avoid it. So we generally avoid stuff if it's below 1/10 of an acre in size. It also has a lot to do with what the surrounding properties look like.
Yeah, exactly. We're going to check the location. We're going to check the shape. We're going to check the zoning. But most importantly, we're going to check the value and how much the property cost. You know, what we call the bid to value ratio. That's the most important thing. When we're looking at buying land, you know, we like to buy over the counter land for 10 or under, you know, for 10 cents on the dollar. For some of the higher quality type land, we'll pay a little bit more, but that's really where we're going to research the market and see what the property's valued is. But we're always going to avoid anything that we call junk land, like side lots or small strips of land or anything like that. It has to have use and value.
Yeah, and you know, when we're talking about checking the value, you know, one thing that's important to note is that the county is going to give value to every single piece of property in the county, whether it has real value or not. And so the assessed value can't always be our only indication. That's why like sales histories and records are a good, you know, indication of value, as are, well, really, you know, any history of sales or what you're looking for.
Yeah. Well, and even something like the map as well could, you know, is going to give us clues about, you know, what type of property this is, the shape, the size, the location. If it looks out of shape on the GSI map, then it's probably a property we're going to want to avoid.
Yeah, there's also a lot of ways we can avoid things like government liens. You know, we can do, you know, an investor title search on the property. We could, you know, sometimes we can find that information through some of the records that are available online. Sometimes we get lucky and that list is included in the information is included in the list.
Yeah, exactly. You know, we'll contact the municipality. If we're spending enough money, then we'll look at doing the professional title search. It's all going to be based on, you know, kind of like we talked about, on how much money you're spending on the investment versus the time and extra expense you want to put into it.
Yeah. Okay. Oh, now also, by the way, because I know it's one of the questions that we've got here is about liens. And when it comes to tax liens, you know, we don't need to perform the same level of research that we would if we're buying the property. You know, if we're looking at a deed auction, then we're going to perform a lot of research into because we're buying the property. But with liens, nearly all of the liens are going to end up redeeming. In fact, you know, 95+% of liens redeem because, you know, most people don't lose the property to foreclosure. It happens pretty rarely. And so that's normally what will happen in liens. But, you know, liens, the nice thing about a lien is that redemption period. You know, if it expires, then we can use the lien to foreclose on the property. So then that's kind of like a worst case scenario. I mean, it could be a best case scenario in terms of the profitability on it, but it's impossible to predict. And so the main thing we're trying to determine with liens is just to make sure that that the value of the property is going to justify foreclosing on it. You know, the foreclosure costs and the effort and some of that stuff. But we're not going to generally dig into stuff like checking the HOAs and fees and stuff like that with liens. We're pretty much going to gonna check out the value on it and make sure that if we need to foreclose on it, it's going to be financially worth it to do so.
Yeah, I mean, really, this, you know, these steps are the process of investing in tax deeds. If we're investing in tax liens, really the assessor information, maybe a little bit, you know, a quick Zillow search on the property value is enough for us in most situations, because, you know, we're not going to acquire the property. Chances are we're just going to make our interest off of it and move on to it. So we're not going to put that nearly the same level of due diligence on a tax lien as we're going to go through this process on a tax deed.
Yeah, and you know, the circumstances or situation that where we might hire a title search company, you know, it's going to be number one, if we cannot get access to the physical records, you know, of the property, and we're looking at trying to purchase it, you know, so you know, if they don't have the records online, the only way we can get that information is through a title search. Then we'll do that. But you know, we'll avoid that whenever we can, especially if it's gonna go to something like an auction.
Yeah, in fact, you know, what we're gonna do in lieu of a professional title search is what we call the investor title search, and we've actually done several past webinars on going through the investor title search process, and we'll do it again in the future, which is kind of that one step within all of those steps where we're going through and researching the court records that we kind of talked about earlier within the webinar.
Yeah. Other ways that we can avoid problems here. I mean, the on-site evaluation is an important tool in helping us avoid mistakes and problems that we could make with if we're talking about structured properties. If there are other ways around that, of course.
Yeah, really the most important thing is we just perform that on-site evaluation. Don't buy a structured sight unseen. Now I guess the one exception with that, if you could get some, in a condo situation,
yeah,
if you can kind of get an idea, because the biggest photo you can get is the photo of the door, as long as you've got some current photos of what the actual, the condo structures look like. But really performing that on-site evaluation, because we've really got to judge a book by the cover. We've got to look at the outside of that house, and we got to determine what we think the inside looks like. Now, in most cases, that may just be from the sidewalk. And so we might have to send somebody out there. And if we do send somebody out there, we want to send somebody who can take as many photos. We want as many photos as we possibly can so that we can make a good decision.
Yeah, preferably, even if we can, somebody that could go out there maybe be able to identify potential problems, by looking at it, somebody with some experience.
Yeah, that's part of the reason why a lot of times we'll send a handyman out there to do that. Also, because if we do end up buying the property, we've got a handyman that we can send out there immediately to clean the property, to maybe meet somebody out there and change the locks, to do all of these little things that we may need to do once we've purchased the property. We've already got somebody on there that can do all those kind of things for us.
Yeah, now when we're talking about holding costs, the reason why we need to account for that is because once we obtain the property, we want to sell it. And when it comes to selling the property, we're not in a situation here where where the property has got to be sold immediately, and we don't want to feel like desperate to sell it here if it doesn't move within a few months. And so we generally try to include about a year's worth of holding cost when we're considering the maximum bid, so that we have time to cover all those things and not worry about selling it. We've got plenty of time to sell it.
Yeah, and holding cost is well, I guess it can be, but that's in addition to even rehab cost. So these things could be like property taxes, utilities, if it's some type of structured property and you need power and water and those type of things on the property, what are those costs? If it's an HOA, or if it has any type of regular fee on it. Even something like a property that you may have to send out somebody to clear the lot once a year in an area where, they're really code enforcement happy. Some cities are a little bit more, may have kind of are more aggressive on their code enforcement.
Yeah,
well,
so
in that
once a year,
area,
you got to cut down weeds.
Yeah, within that year, you've got to go down there and have somebody cut down the weeds once. So you're going to, put $150 or $100 or whatever it is to somebody to go out to clear the property. If that's the case, we'll build that into the holding cost.
Yeah. Basically, we just want to avoid getting surprised by anything. But really, as we gather all that information, our confidence regarding bidding goes up, and we can generally eliminate major risks there. And as long as the numbers work, we're okay to bid.
Yeah, exactly. We'll go ahead and set that maximum bid amount. We'll attend the auction, or if it's an over the counter, we'll just go ahead and buy it. But we always want to stick to that maximum bid amount. The times we've seen people lose money.
Your mixed bid.
Thanks for pointing that out. Friendly. Anyway.
Yeah, I threw him off. Well, we're pretty much out of time anyway, though. Thanks for sticking with us here to the end. We'll get replays up of this and available, and certainly let us know if you need any help with anything.
Yeah, thank you.
You guys have a good night. Stay safe.